Welcome. In this video, Zbcn coin price made a bullish pattern. We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand. When we carefully examine the short-term price movements, we can clearly observe a distinctly noticeable descending trend structure. This structure has had a significant impact on recent price action and has influenced investor decisions. In particular, the fact that the price has touched this descending trend line multiple times is a strong indication of how seriously this technical level is perceived in the market and how closely it is monitored by many traders. In technical analysis, the more times a trend line is tested, the more significant and reliable it becomes. This shows us that the current descending trend is a structure that should be taken seriously. As of now, the price is moving very close to this descending trend line. This means that the market is at a highly critical point. The price approaching this trend line once again brings the possibility of a breakout into focus. In technical analysis, there's a frequently observed phenomenon. The more the price approaches and tests a trend line, the more likely it becomes that the trend line will eventually be broken. What we are witnessing now could be a reflection of exactly that situation. Especially for short-term investors, trend lines like these are highly strategic decision points. These lines serve both as support resistance and as potential breakout levels. If the price manages to break above this strong descending trend line with an upward move, it would technically be considered a significant breakout. Such a breakout creates a positive sentiment in the market and lays the groundwork for a potential rally. This is because breaking a descending trend also boosts the confidence of previously hesitant buyers and triggers a shift in market psychology toward the upside. In the event of a breakout, the concept of trend reversal, often used in technical analysis, comes into play. This concept signals that a downward trend has ended and a new upward trend has begun. If the price manages to break through this descending trend line, it would be seen by investors as a sign of reversal, and positive price expectations would likely grow. Especially if this breakout is supported by high volume, it would confirm that the move is not a false breakout and that it is backed by strong buying interest. This is a key factor for the sustainability of the uptrend. With the upward break of this descending trend line, the likelihood of the price testing and even surpassing previous resistance levels increases significantly. This could trigger a broader upward movement in the market. In technical analysis, there's a well-known principle. When a trend is broken, a new trend begins. If this scenario plays out, the currently constrained price action could give way to a freer, more aggressive upward move. The fact that the price has previously touched this descending trend line multiple times may have turned it into a strong resistance level. However, there's an important point to consider here. Each touch slightly weakens the strength of the sellers at that level. In other words, with every test, the selling pressure at that line is chipped away, and eventually, the resistance weakens. This increases the likelihood of a breakout. A similar setup appears to be forming now. The price is once again approaching this descending trend line, and this could be the final stage of preparation before a potential breakout. But we can't base our analysis on trend lines alone. Let's take a look at the other metrics as well. Stay tuned. When we take a close look at the chart structure, we can clearly observe the formation of a flag pattern, which is one of the commonly encountered and potentially powerful formations in technical analysis. This pattern typically forms after a strong upward or downward movement, followed by a short period of pause and consolidation. The current price structure reflects this dynamic. In particular, after a strong upward move, the price has slightly pulled back and is now consolidating within a narrowing range, exhibiting all the characteristics of a classic flag formation. Although such consolidations represent a temporary balance between buyers and sellers in the market, they generally result not in a trend reversal, but in a continuation of the existing trend. Flag formations are known as continuation patterns in technical analysis. In other words, the appearance of this formation suggests not that a trend is ending, but that it is temporarily pausing and is likely to resume in the same direction soon. In the current scenario, the price is very close to the upper resistance line of this flag structure. This is an extremely encouraging development for investors. Because if the price breaks above this upper boundary, the pattern is considered technically complete, which is often seen as a signal for a strong upward movement. One of the most striking features of these types of formations is that the price movement at the moment of the breakout is usually very fast and decisive. This is because when the price remains compressed in a narrow range for a long time, the energy stored in the consolidation tends to explode in one direction once a breakout occurs. In the current case, the technical outlook strongly supports the likelihood of an upward breakout, especially the decline in volume during the formation and the expectation of a volume increase at the moment of the breakout further strengthen this scenario. In flag formations, If a breakout is accompanied by rising volume, it is considered a sign that the breakout is strong and likely to be sustained. The target of the flag pattern is also very clear and technically measurable. Typically in such formations, it is expected that the price will move upward by a distance equal to the height of the previous move, known as the flagpole. In the current chart, the sharp rally that occurred before the flag serves as a strong reference for determining the potential target level. This target represents the minimum distance the price is expected to travel once the formation is complete. Therefore, for investors, this target level after the breakout is highly important for both entering positions and setting potential profit expectations. Additionally, the location of this formation is highly strategic. The flag structure has formed near the current price levels, suggesting that the breakout could happen in the near future. In technical analysis, the duration of the formation and volume dynamics provide important timing clues for investors. In the current situation, the proximity of the price to the upper resistance line of the flag indicates that the breakout could occur at any moment. As long as the overall market sentiment remains positive, the completion of this formation to the upside stands out as a strong scenario. The psychological impact of the flag formation on investors is also noteworthy. Even during moments of uncertainty in the market, such patterns provide a technically promising outlook, helping investors stay positive. Moreover, many traders trained in technical analysis are aware of these patterns, so once the formation is complete, the buying pressure is likely to increase. This causes the price to react with a quicker and stronger upward move. After the breakout, the price is typically supported further by traders engaging in breakout trading. Looking carefully at the chart, it's clear that a distinct falling trend structure has formed on the RSI indicator. This downtrend is a classic momentum trend that is often encountered in technical analysis and occurs during periods of weakness in price action. This negative slope on the RSI suggests that traders have been more cautious recently and buying pressure has weakened somewhat. However, this does not have to be permanent. On the contrary, the current level of the RSI and its proximity to the trend line is a remarkable and promising technical outlook. This is because oscillators like the RSI tend to signal before price movements. This means that a breakout in the RSI can be a precursor to a bullish move on the price chart. This downtrend in the RSI indicator has not been tested for a long time and is now quite vulnerable to a breakout. Breaking such structures is often the precursor to big price moves. Especially when the RSI breaks this trend to the upside, it shows that buying power is regaining momentum, and investors are back in positive expectations. A trend break of a momentum indicator like the RSI is not only a technical signal, but also a strong sign that the market is making a psychological turn. RSI trends matter. Yes, friends? I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments. Analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.